Good afternoon, ladies and gentlemen. Thank you very much for joining our first webinar in 2022 regarding property. And tonight we are going to be attending to some very, very important aspects that a lot of investors always have on their mind when they're looking at a property investment. And that's the element between what is more important, quality of tenant, what's the big impact on your investment if you don't have a quality tenant, versus the monthly rental return. So sit back, enjoy the webinar, and please be sure to engage afterwards. Send us through your requests, and be sure to click on the link that we can book a follow-up meeting with you in order to discuss that specific secret that we will be revealing to you at the end of the webinar tonight as well, about how do we get quality tenants. And even if this is your first investment that you're looking at, you cannot start with something better. Low risk investments are always the best way to go. So ladies and gentlemen, enjoy the webinar and we hope to hear from you soon. Good evening, ladies and gentlemen. Welcome to tonight's webinar. Thank you for logging in. We had the same webinar last week, Thursday. We had a lot of people who came back to us and said, sorry, they could not make it and something came up, and we also had some technical errors on our side where links didn't go out. So we thought it good to do the webinar again, invite everybody who's missed the webinar to come and find out what is a potential strategy for you for 2022. What's that main secret that a lot of investors actually don't know about? And excuse me, at the end of the day, I think that you should take something away from this webinar. Even if you think that, you know, you've tried and dusted everything, you've got 20 investment properties, whether you are a startup investor on tonight's webinar, welcome. Thank you for joining it. It should be a great start and a success to your investment portfolio. And the topic that we are going to be handling tonight is going to be the matter of quality tenant versus monthly rental return. What is more important? At the end of the day, I've spoken to so many investors over the past couple of months and over the past year, in actual fact, during the pandemic and the ups and downs. And I think everybody has been affected by the pandemic in some sort or other way, whether you're an investor and you had problems with tenants, whether you are a tenant yourself and you were struggling to make payments maybe, or you had to make certain arrangements in order to continue with your lease. Everybody had some challenges. So when I spoke to a lot of investors, effectively, I asked them, you know, what was the biggest thing in your property investment journey, and what was the biggest thing in your property portfolio that you are struggling with or that poses a headache for you? And most of the investors came back to me and they said that the tenants that we get are not always quality tenants. And that made me think, so are you doing it right? What are you doing to ensure that you are getting a quality tenant? What aren't you doing that causes you not to get a quality tenant? So at the end of the day, I sat and I thought, well, it's actually fairly easy. And tonight I'm going to show you guys exactly what I mean with quality tenant versus less of a quality tenant. And look, ladies and gentlemen, there are so many different strategies. There are so many strategies that you can follow. At the end of the day, it depends on what is your appetite, what is your credit issue, what's your scoring, what is your lending ability. There's a lot of factors, but we can assist you as property investment strategist in order to make sure that we can try and help you make the right decision in that mind. Quality of tenant is definitely one of the things that everybody has got in their mind. Increase the quality of tenant, you're increasing the quality and value of your investment. So a lot of investors told me, listen, Charl, I don't want to get into the property market anymore. You know, I've had some bad experiences with tenants, and we're going to run through a couple of those examples as well. But I had a bad taste in my mouth and I don't want to invest in property anymore. And then when you delve into it, you find out that silly mistakes that they've actually made. It could be just by the screening process right in the beginning. And it's small things that we are going to touch on. But ladies and gentlemen, that is what the topic is all about tonight. and we are going to share at the end of this webinar. It's not going to be a long webinar. We're looking only at about 45 to 50 minutes, and then we'll have a Q&A right at the end. So please, if you can, reserve the questions for the end of the webinar. We will give everybody an opportunity to raise the question, and I will answer them as best possible I can. But at the end of the webinar as well, after we've revealed that bit of a secret regarding the quality of Tenant, then I will give you guys the opportunity where you can click on the link and you can book a follow-up meeting with either myself or one of my colleagues in terms of the property investment strategy going forward for you. But ladies and gentlemen, let's get into it and let's get the night going. So ladies and gentlemen, let me introduce myself properly. My name is Charl van Niekerk. So I've been with Central Developments for a very, very, very long time. I live in Gauteng, in Centurion, to be more specific, married, proud father of 2 children, graduated in 2006 from the University of Technology in Pretoria, the Old Tshwane University of Technology, or Old Technikon. And I started my property career in 2007 with Central Developments. Effectively, I've invested in my first property already in 2007 or just after 2007. And I was 27 at the time. So after, over the past 15 years that I've actually been with the company, I've been involved in many projects. So I am coming to you essentially with this tips from a developer's perspective. So keep that in mind. At the end of the day, we want to offer the solution to investors, but not only from an educational point of view, but with the educational point of view in mind, we are going to offer the investor the solution as well. So not only the educational side. So worked on many projects over the past 15 years, sold over 2,000 properties within Central Developments myself. And overall, I'm a property enthusiast. I'm an entrepreneur. I'm a property investor, and property is what I like. I'm a freelance photographer, worked in photography for a very long time as well, but property still remains my passion. So who is Central Developments? Effectively, ladies and gentlemen, we started the business with the great mind of all, Anton Kraus, who is the MD of the company, started the business in 2002. And our business involves rental complexes, retirement lifestyle estates, secure lifestyle development, service stands, and storage facilities, mainly across the whole Gauteng. We do have a beautiful project in Bredaszicht, in Witstrand, in the Cape region. We've also had some projects in Bloemfontein, in the Free State, but mainly our offices and our projects are all based here in Gauteng. This is where the biggest demand is. This is where we've seen the growth going from strength to strength. And this is where I've also seen, not only with myself, but various investors, actually how they could apply various different property strategies, like a flip, like a multi-let, like a Airbnb type of thing in Gauteng, where people buy property as an investment from a developer, saving on all of those different costs. Because ladies and gentlemen, at the end of the day, speaking to you as a property investor, whether you're starting off your journey, I can tell you one thing, that property is that one thing where you can use other people's money in order to start your property journey. You have to start somewhere. The younger you are, the better it is to actually start. Our head office is based in Midrand. We've developed more than 31,000 units to date. We employ close to 1,000 people permanently on the company payroll, and we have a company portfolio close to 5,000 units, which we manage ourselves, and it's part of our turnkey approach to offer high quality rental options in the market. So if you think about it, you know, in our line of business, if there's no investors out there purchasing property as an asset to let out, as a buy to let, tenants won't have solutions in order to rent. So it's imperative that from a developer point of view, we also make those opportunities available. And it is very important for investors to actually see that opportunity and say, listen, this is the only sort of investment where I can get my foot into the door. I'm a young professional. I've maybe just started my new job, my new career. I've got some disposable income. I need to get my foot into the door. Property, ladies and gentlemen, has opened many, many doors for me in the past. I've bought property that's going to still open doors for me in the future when my kids goes to varsity. There's all those type of things which you can actually utilize property. Property is not only about the monthly impact that it has on your pocket. It's about that equity. It's about reinvesting that equity into something more, building that portfolio. So the big question you need to ask yourself at the end of the day, if you're serious about investing in property, whether you are here on the webinar for the first time or repeat or a mature investor, you need to ask yourself, when do I want to retire? How many properties in actual fact would I like to have by the time that I retire? What is the asset base that I want to have? Or are you investing your money in RAs? Or are you investing your money offshore? Are you investing your money in cryptocurrency? Are you investing your money in shares? Every time I mention something, I mentioned, are you investing your money? So with property, you do not have to invest your money. The small portion that you are maybe using from an investment point of view to subsidize shortfall on a property, you should see as the premium you're investing towards your investment. All right, so let's get into it. Defining what makes a good property investment. Everybody always asks that. Everybody has a different opinion. Some people say, no, it's about the finishes that are in the unit. Others say, no, it's the size of the unit. Other people will say, no, if I don't like this property, I'm not going to buy this property. But the fact of the matter is that there is somebody out there that does like this property, whether it is for the price, whether it is for the size, whether it is for the layout, whether it is for the locality. So there's a lot of different opinions. And I'm just going to sum it up for you in a few bullets, just to show you what are the main elements that defines what makes a good property investment. So first and foremost, nothing new to anybody. It's always locality. So everybody would say location, location, location. That's what's going to make a good property investment. Ladies and gentlemen, it's not 100% correct. It's not incorrect as well, but there are various elements when you look at it. Yeah, locality is very important when it comes to demand. If your development or if your property is located somewhere where it's not desirable, somewhere where the demand is extremely low or average, it won't make for a good property investment. But if you do buy something that's in a locality where the demand is high, the supply is low, it's close to amenities, all those type of things, your location then is extremely important. Who are you going to target? Who is your target market? That is effectively part and parcel of what's going to decide on whether that property is a good investment or not. So newly built properties, they just appreciate in value a lot better. So you can think for yourself, now you're buying something from a developer, it's brand new, it's actually under construction still, it's just been completed. You've got all of your guarantees in place and your NHBRC and your builder certificates and all those type of things are actually still in place. And that's what gives you a big cost saver in the beginning, at least for the first couple of years, where you normally don't have any normal wear and tear maintenance on your property. But then again, ladies and gentlemen, I'm going to refer to that quite a lot, but that is going to be where the quality of tenant comes in to your property. You can buy a brand new property and after year one, you need to do so much maintenance to the property because the tenant in actual fact damaged your property, didn't look after it. It doesn't matter whether you got your rental income every month, the tenant caused you maintenance. And then you can say, yes, but there is a deposit. So I just subtracted from the tenant's deposit. Ladies and gentlemen, I've heard so many stories. Luckily, it's never happened to me before. I always screen the tenants and vet them correctly. But I've heard so many stories from my investors where they can say, listen, the deposit should have been 3 times as much in order to cover all of those things, replacing carpets, repainting. There can be severe damage to your property. Once again, it comes back, what is the quality of your tenant? So new build properties, they at least appreciate in value a lot more for a lot longer than what a pre-owned property does. So if you go and buy a property that's maybe already 10 years old in an area where it's already fully developed, your property has already reached quite its peak in terms of what the value of that property is. It's not going to grow at the same value as buying a new property from a developer. All costs are included. So all costs being included can make a good property investment. Why? Because you're saving on the initial capital out. You don't need to fork out so much money to pay for transfer fees, legal fees, all the additional costs that goes on top of that. And when you're talking about R1 million property, ladies and gentlemen, you are talking about easy nowadays 35, 40,000 Rand, if not more, that you need to have available to pay all upfront fees. And then you haven't spent a cent on the property. So normally, if it's a pre-owned property, there could be some maintenance, there could be some things you want to change, etc. So all costs included in a new investment, it helps a lot to capitalize and give you more money in your pocket. If it's easy to sell in the future, it's a good property investment. So if it's a good property investment now and it's got good foreseeable sales value, it's going to make it a good property investment. And normally supply and demand is the thing that also determines whether your property is going to sell or be high in demand still going into the future. Brings it back to locality as well. High rental demand. All right, so not being without a tenant, that's very important. That's what makes it a good investment. So if you buy this property and you did your due diligence and you actually see that, listen, this is quite a unique property. This is quite a unique development. It ticks all of the boxes. It's in the right location. It's close to all the necessary amenities. The target market, which I'm targeting, it is there for them, whether it is public transport, whether it is the Gautrain, whether it's shopping centers, whether it's business parks, whether it is whatever factor, it is important to know that there is a high rental demand. All right, not to be without a tenant. Tenants target market. So you always aim to have a low risk, high quality tenant, and we'll get to that a bit now. Desirable attributes. All right, so desirable attributes includes not necessarily for the unit itself, but for the area, for the development, the attributes inside the development. So, people move to something in order for them to uplift their lifestyle, improve their lifestyle, the kids. There's always a demand for that. Close to a school, it's got all of the nice amenities inside their estate. How far are they from other amenities outside of their estate? So desirable attributes is what makes it all good property investments. Buying from a developer with a proven track record, very important, ladies and gentlemen. You can buy a new property nowadays from anybody, but how good is that track record? Are you going to get what you paid for? What happens if something is not right? Are you going to struggle to get it fixed or get it sorted out? Have a good proven track record. That's a trustworthy. And buying from the right developer with a proven track record, if you are not investing from a developer, there's a lot more aspects that you need to investigate and research yourself. So, for instance, if you decide to go and buy a pre-owned property, you need to most probably go and find out all of the market research elements. What is the tenant demand in the area? What is the sort of rentals that the area is getting? What is the average selling prices in the area? Who is typically your target market? Who's the audience? All those type of things you need to do yourself. Chances are that some estate agents might be able to give you that information. Some might not, but at least buying from a reputable developer, those type of things have already been done. So even before the developer broke ground and decided on this is the type of product that there needs to be, this is what we are going to construct, this is the price, this is going to be my rental, these are going to be the levies, so that I can give my investor a return on investment calculation. At the end of the day, we have to do all of those market research accurately, all from the beginning. All right, so property investment, know your risk and your risk will be less. And this is all about mitigation. So in anything in life, if you know what to look out for, you will make sure that you've got the right things in place. So let's make it simple. If you are somebody that likes to go hiking, you're adventurous, you're a nature person, and you are going to a new locality for a hike which you've never been before, and you're not sure what's the sort of risks out there, and somebody tells you, right, if you're going there, it's a very tropical area, you're going to find a lot of snakes there, and it's these sort of snakes, you are going to need these sort of leg protectors in case of snake bites. This is something that is recommended. So now you know the risk, and now that you know the risk is going to be less because you're going to mitigate it. And exactly goes the same for property and any investment for that matter. But the nice thing about property is because it's a tangible asset, and it is probably one of the most well-known and popular assets to invest in the world, there is a lot of research out there. There's a lot. You can go onto Google and you can type a question and Google will give you something. You can speak to a property strategist like myself and you can ask me a question. I can tell you, yes, if you do this, you be cautious of A, B, and C. And if you know what A, B, and C is, you can mitigate it once again. So what do we know as property investors is one of our biggest risks when it comes to property. Our biggest risks when it comes to property is most probably the fact that a tenant will default in payment, because that's the thing you're most scared of, especially because 8 out of 10 investors are buying through finance or are making or dependent on finance from the bank. So you don't want to pay a bond repayment and all of their expenses without having some sort of rental income that can at least cover you during that. But ladies and gentlemen, the harsh fact and reality of property investment is it's going to happen at some point in your life with every property that you've got, at least once. All right. And that's when it's going to come back to quality tenant. You're going to know what the risk is. You need to look at quality of tenant. So you need to start from the beginning. And when you start from the beginning, it's where you need to screen the tenant, vet the tenant, make sure you place the right tenant right from the beginning. That's where it starts. Nobody can anticipate what happens in life. What happens in life is pandemics happen. What happens in life? People lose their job. What happens in life? People get married. People get children. People need to move from something smaller that was close to work, which was ideal for him. Now he needs to move something more that's got 3 bedrooms that can accommodate a baby carriage and all those type of things. But now he needs to drive 20 kilometers further to work. It's always a give and take. And that's going to bring me back again to the quality of tenant. Ladies and gentlemen, it's going to blow your mind. You will see that it was right in front of you this whole time. But I'm going to tell you where and how we are going to mitigate all of those risks from more medium to high risk tenants to eliminating it almost altogether. All right. So what we are saying is there's no such thing as a risk-free investment, right? However, it can be mitigated. So real estate is truly the only thing, and I mentioned it before, it's the only thing that you can really invest with other people's money. OPM, everybody is, or most of you should have heard about that. And using other people's time, OPTs, other people's knowledge, OPKs, all abbreviations, which is known to investors in the market. Everybody tells you, don't go and use your own money. Use an angel investor or borrow from the bank or do this or do the others. There are so many different ways, ladies and gentlemen. There are so many different things. And when I started with my first property, I didn't go out and buy the cheapest property, luckily not. So I went out and I had the guidance from mentors and coaches within the property development space. But I buddied up with one of my friends and I say, right, let's do this. Let's pull our resources together. Let's pull our money, our knowledge, and everything together. Let's buy something slightly more expensive that's going to give us a higher yield at the end of the day. Because 500,000 Rand, which grows in value with 6%, is going to be lower than something of R1 million that also grows with 6%. You're going to get more capital appreciation at the end of the day with a more expensive property. That property might cost you a bit more on a monthly basis. Obviously, there's nothing is for free. But at the end of the day, the rewards of the more expensive property and going into and getting my foot into the door, playing the game, as we say, start playing the game, even if it's with somebody. That's the only way, ladies and gentlemen, that you are going to learn. Take a bit of risk, share the risk with somebody, and you're also going to share the rewards with somebody so that the second, the third, and the fourth, and the fifth property is going to be much easier at the end of the day. So, right, now we're getting into it a bit more. What are the typical risks associated with property investments? What are the typical risks associated with property investment? So now we're first going to be focusing on your medium to high risk tenant and actually the everyday tenant. So there's no specific group of tenants that I'm going to be referring to right now. There is an actual fact. These are the tenants that you are probably currently that you currently have in your properties. These are the tenants that if you are currently in the market looking to buy a property from whoever, I'm not going to mention names, but if you are in the market now looking to buy a property, whether it's in Gauteng, whether it's in Ballito, whether it's at the coast, whether it's in the Free State, it doesn't matter. These typical risk elements is probably going to be the tenant that you will be lining up, or the potential tenant that could be lined up for your unit, because those are the tenants that developers are mostly developing for. All right. So firstly, a tenant damaging your property. Not looking after your gardens. I mentioned it earlier, damaging your carpets. Ladies and gentlemen, you can disagree with me, but I've been there. I've been a student. I haven't been the worst student, maybe, but I've been a student. I've had a lot of student friends. Students, in my opinion, is not the typical tenant that I would like in my unit. So you can have tenants in your units that damages your property to whatever extent. Having large parties, burning your carpets with cigarettes, damaging your cupboards, getting drunk, whatever the case might be. Those are potential tenants that you don't know beforehand when you look at their bank statements and all those type of things, that you would know effectively is, that sort of tenant. But everything results in maintenance that is effectively a responsibility of yourself, the person who's managing your property to do that. But those are all part of the risks. A typical residential investment, all right, you stand the chance of having a new tenant annually. So tenants' situations change. We've discussed it a bit earlier as well. So as I said, life happens. So when life happens, you need to relocate for work. You're starting a family. You need something bigger. A pandemic happens. You've got job loss. You've got a pay cut. All those type of elements effectively could affect your everyday type of working class tenant. Myself, my colleagues, my friends, we are those tenants potentially looking for a rental unit in the everyday type of market. Possible interest rate hikes. We've just had an interest rate hike from 7.25 with another 25 basis points to 7.5. And ladies and gentlemen, it's a reality. We've never had these low interest rates. So if you want to capitalize, the time is still now to still capitalize for the next couple of years. My prediction, and don't quote me on it, is that interest rates will gradually go up. I think we will maybe see an 8% interest rate by the end of the year. But we are faced with a lot of challenges. So the interest rate can't just skyrocket quickly in a year and go back to 9.5, 10% where we were previously. And still, ladies and gentlemen, 10% is still a low interest rate relative in property terms. I don't know for you guys on the panel, on the participation, if you remember the days in 2008 and 2009, we were in that recession, interest rates were at the 20% mark. Nobody wanted to buy. The guys who bought, investors, they were spoiled for choice in terms of tenants. There the demand was extremely high, the supply was low. So you could pick and choose, but you did not sell your property because nobody wanted to buy. So you kept your property, and all of those investors, ladies and gentlemen, benefited from that today. So your time is definitely now. You should not think the interest rate is going back down. I'll wait until it's back at 7%. There is no better time to buy the property effectively than now. So tenants defaulting in rental payments. So this happens. It's a reality. Your tenant might default in rental payments for whatever reason. If you haven't done the screening correctly right in the beginning and your tenant defaults in payment, it's probably because you didn't do the screening and the vetting correctly. You chose the wrong quality of tenant. That is a possibility. If you did everything right in the beginning and all of a sudden your tenant is now phoning you and say, listen, I can't make the payments anymore because of job loss, relocation, whatever the case might be, you could potentially be 1 month out of pocket with your investment unit if proper notice hasn't been given and you can have enough time to find a tenant. So you could be easily without a tenant for an extra month or two. And if it's a tenant that just simply absconds and doesn't pay anymore, if you start the legal process immediately to get rid of them, or if you use whatever option, to your disposal to try and get rid of the tenant, you might still be without a tenant or a rental income for a month or two while you are evicting the tenant. A short notice of a tenant in the list in a lease termination. So once again, life happens. If a tenant gives you notice 4 days before the end of the month and say, listen, I know I'm going to forfeit my deposit, but I need to be out end of the month. It does not leave you any time to market for a new tenant, find a new tenant, except if you bought in the right development where the demand is high and the supply is low. There's always a demand. People are looking for places urgently in that development because that development is focused on a niche market, a niche product. It's got an element of need to it. If you bought into something like that, chances are even better that you can find a tenant within days, probably from a waiting list. And then lastly, one of the big elements or big topics is buying a property that is in oversupply and under demand will result in a low resale price. We mentioned it a bit earlier as well, and that future resale value, and a higher risk of being vacant for a longer period of time and at a very competitive rental price. So let me give you a scenario. If you buy in a development, for argument's sake, that has got 800 units, and all of the units are the same sorts of units. So they might all be apartment units between 1, 2, and 3 bedroom units. It's 4 stories maybe. The ground floors have got private gardens and the estate has got a nice central facility. But effectively, you've got 800 units that was built over the course of 3 years, but they're all the same. So if you go and sit down and you do the math and you say, right, a lot of the times, a lot of those units are sold to investors, especially in the beginning phases, because when you get in early in a development, you capitalize on the price as you increase and go to the 3rd and 4th phase, and where the developer essentially exits and sells the last unit, because the last selling price is then your exit price. That's your new market value of that sort of property. So now you maybe bought at R1 million, 3 years down the line, as the phases went, yes, you're happy. The property appreciated with 300,000 Rand. The demand was there, etc. Now you think, okay, I'm going to cash out. I bought it as a flip. In the beginning, that was my strategy. So I wanted to do a buy to let in the beginning, let it grow in capital value, and then sell it as a flip property and make some extra cash to do whatever. Go on vacation, buy a wife a car, or if you're clever, reinvest it into the next properties. But now you're faced with a bit of a challenge. And the challenge is as follows. So now you're in a development, potentially 800 units in the development. All of the units are more or less the same. And let's say there's 3 different types of floor plan. There's a 1 bedroom, and there's a 2 bedroom, and there's a 3 bedroom unit. So you bought a 1 bedroom unit because that was the cheapest unit at R1 million. And there are, let's call it 300 1 bedroom units. Now there's a 2 bedroom unit, which was costing at 1.3 million. And there's another 300 of those units. And there are 3 bedroom apartments as well. And they were priced at 1.8 million for argument's sake. And there's only 200 of those units. That's what makes up the 800 units. So now, what are the chances that the development has reached its peak now? This development, there's nothing necessarily very unique about it. So if you drive down the road, you're going to find another complex with apartment units. If you drive a bit further, you're going to find another estate with more apartment units and maybe even nicer facilities. And if you drive down the road there, you're going to find another development, etc. So now all of a sudden, what are the chances if 10% of the owners in that development who either bought for investment or bought for themselves and whatever, if 10% of the 800 units put the properties into the market, automatically there's 80 units in that same development which is up for sale at any given point of time, hypothetically speaking. So now you are competing with oversupply and under demand. Because now there's nothing special anymore. Investors don't necessarily want to buy those units from you anymore because the ROI might not be as favorable as it was 3 years ago. There is options to choose from. There are a lot of other guys in the same development selling the unit. You want to try and sell it at 1.3. This guy wants to sell it quicker. He's putting it in at 1.27. This guy says, listen, I'm not hard up. I just want to exit. I'll take 1.2 million Rand. So for how long are you going to have to put that property into the market? How much are you going to have to drop with your price? Then you got the rental thing. So the same story goes. If you buy into a development where there's an oversupply and under demand of the same sort of product, and your tenant and the resident for that sort of product is not niche, it's not unique, it's not something that is rare to find, you will not experience the type of return on your investment that you were hoping for. So, ladies and gentlemen, just think about that. Sit down, think about that. Think about the next investment that you're going to make. Which boxes are it ticking? Which are the risk elements that you need to look out for? What are the potential future growth for this area, for this development? Why do I need to buy this unit in this development? And what is it going to do for me over the next 3 years, 5 years, 10 years? You need to think about that as well. If you are purely buying property as your long-term pension plan and you want to build up quantity, great. Because then the medium term is not going to affect you that much or at all in terms of the supply and demand element, the tenant competition, the seller competition, or that sort of thing. So always think about supply and demand. That's what makes the world go round.